All right, welcome back to this episode of Under the Tamarisk Tree. I'm joined today by Derrick McIver. Derrick's the co-founder and managing partner of Sleeping Giant Capital, and we're going to say SGC from this point forward. Derrick, thank you for being here.
Thank you. Thank you. Have you told your listeners what the tamarisk tree is? Because I just read about it.
We actually recorded an episode about what the tamarisk tree is.
Okay,
So
good.
and it's on our website. So if you're really interested, hop over to our website and
That
Tamarisk Advisors and check it out.
that's where I read it. I read it on your website. I didn't know that trees, like beyond the shade, it produced water or something or condensation, which was really interesting to read,
Yeah,
or
yeah, it
something along those
absorbs
lines.
salt and it gives off cool air. So it's kind of like an air conditioner.
Yeah, it's
Um,
an air conditioner for legacy, right? And it takes 80 years to grow. So if you plant one, it's not for you, it's for someone after you, which I thought was super cool. But yeah, awesome.
all right. Well, since
Okay.
you brought it up, I'll tell a real quick story about where that came from. And then, but this podcast is not about me and my company. It's about you and your company. So,
Well,
but
we
I'll
can
go
make it
off on
about
a
whatever we
tangent
want
here
to,
real
Phil.
quick.
Like, yeah.
Yeah. So a quick tangent. So I was in the process of rebranding my consulting business, which I started in 2007, and to really be focused on succession planning. So we brand new name, brand new entity, everything, and so complete rebrand. And we didn't have a name, and I had a working name that I wasn't happy with, but it was just a working name and code name, whatever. And my son sent me this podcast, a link to a podcast, and these two pastors were talking about trees from the Bible in this podcast
Mm,
episode. And I went, that's really cool because I have a horticulture landscape background. I'm like, I got to listen to this. So I'm out in the yard putzing around doing stuff, got my AirPods in, I'm listening to this podcast. And they start talking about the tamarisk tree and being a legacy tree and a very slow growing tree. And why would someone plant a tree that they're never going to benefit from? Well, they're only going to plant it for their grandkids or their great grandkids or, whatever, downstream. Now, there you go. That's the name of my consulting business.
well, it also, when I first looked you guys up, I said it has risk at the end of it too, right? And I thought that there must be his first name plus risk or whatever that is. And then
Yeah.
I did diving. I'm like, oh, this is such a cool tree. I almost wanted to go plant one. I said, do these grow in Michigan in the middle, like when we're -10? Will they survive? Like, I'm not
Don't
sure though.
don't plant when they're an invasive species in the United
Ooh,
States. So do not plant one because what
okay.
happens is they grow in the desert naturally. They absorb moisture. So kind of like bamboo. Like if you plant bamboo somewhere, it'll take over everything, and you
Yeah.
can't get. It'll end up in the all the drains and ditches and yeah.
Okay.
So don't plant a tamarisk tree.
Okay.
Which
So,
was also a great name, a great reason to choose the name because nobody was using the name for
yes.
anything. So,
Yeah. Not only is it legacy and creating shade and condensation for future generations, but it's also invasive. So
yeah, it was a blue ocean. Yeah.
yeah, good.
All right. So, kind of the two purposes of having you on, Derek, is to get to know you and to get to know your firm.
Mhm.
And so, let's start with just a quick overview of what SGC is, and then we'll go from there.
Yeah, so Sleeping Giant Capital, we are a West Michigan-based investment group is the easiest way to say that. We're very place-based, and there's reasons for that. I can go into that. And when I say investment group, right, there wasn't a category for what we did, right? Private equity has a category, venture capital has a category, and we just couldn't find the category. Search funds have a category. Whatever those categories are, we didn't our goals never aligned with any of those categories. It just did not. When for example, when we buy companies, we don't talk about exit strategies. It's not our thing, right? Like we're not exiting. We're a tamarisk tree, right? You're not.
Mhm.
We're keeping legacies here in West Michigan. We're keeping the companies in West Michigan. We're investing for the long term. But the other thing we do is we find extremely talented, motivated individuals that want to be entrepreneurs, meaning they want to own and run a business, want to be the CEO of a small to medium sized West Michigan business. And we get behind them, we empower them, we support them to go do that. So we didn't fit in a category. So we're a place-based investment firm that finds leaders and helps those leaders buy companies in West Michigan. Now, when I say buy companies in West Michigan, there's uh, an opportunity for anybody that wants to take it. There's a
Hmm.
lot of companies that are as why your companies I'm guessing around is that need a succession solution. So at the
Hmm.
same time, we want to empower leaders. We want to be the preferred succession solution for every West Michigan medium-sized company, right? That is our goal. We want to provide them the best solution they have to
Hmm.
preserve the company they've built and make sure they can survive. So what do they need? They need a new leader if they want to retire, and they need an exit, a capital to buy that company. So that's the two things that we do at our core.
Yeah, I love that phrase, succession solution. That's great. It's got a nice ring to it. Don't know if I'm all that familiar with it.
Well, there's a plan. Like everyone has a plan, but in that plan, there's things you
Right,
need, right? There's capital,
right.
and then in that plan, there's somebody take over, right? Those two things are, and so, and I think in a family business, you always want to go to the kid. Like kids are the plan. Then,
Hmm.
okay, if you have kids that don't want to take over, what's the plan? And see, well, I'll give it to somebody in my organization. That somebody in your
Hmm.
organization doesn't have the capital to sustain your legacy and all the wealth that you've built over the last 50 years.
Right.
So you need a solution. You need a succession solution. And we wanted to be, how do you provide customers value? In our case, it's business owners. We
Hmm.
provide a new leader, CEO to take over, and we provide you your wealth that you've for exit and retirement. Those are the two things that we do really well.
Yeah, great. Well, I want to dive deeper into all those. But how does someone like you get involved in this? Like you have a really interesting background. You were telling me you're a former hockey player, which I love because I play hockey and from Thunder Bay, Ontario, which is an amazing hockey town. But you also have 1,000 degrees and like you're a well educated, well traveled. How does at what point did you say I want to get, I could do anything in the world. You're a smart guy. How do you choose this path? How did you end up here?
That might take the rest of the podcast. Yeah,
That's
no,
okay.
I'll try and make it a short story, right? I grew up in Thunder Bay, Ontario, playing hockey. Like that's all you did as a kid, and it was still the passion of my life. I still coach kids hockey at Fox Motors in Grand Rapids. I have my family. I coach hockey, and I have my
Mhm.
my organization. Those are the things that I prioritize all the time. And yeah, I grew up playing hockey. It was thrilling. It was adventurous, and I got to a decently high level. But the people I play with, a lot of the guys went to the NHL. I played college hockey. Then when I was finished hockey, I realized while I was playing, both in juniors and at Ferris, that I wasn't. You get hit with the realization you're not good enough. And then I tried to make it in the pros. And you're like, you're not good enough. So what do you do next? What replaces that? And if you do any digging, a lot of athletes have this challenge. What's life
Mhm.
after? And when I realized I wasn't good enough, when I hit college, I started taking my education very seriously, right? I need to be able to do something. Uh, well, as I grew up, I didn't grow up uber wealthy, so I worked a lot. And there was a gentleman I worked for who was a serial entrepreneur acquirer in Thunder Bay. Um, and he was a good mentor, and he bought a ton of businesses, and you saw him do it. And he had development, he had asphalt business, he had concrete businesses. And he was just buying all these businesses, and he really provided a lot of value to the Thunder Bay community. And I said, that's a really cool thing. Then I went to university, and in university, everyone's like Fortune 500, get your job. And I'm okay.
Right.
So I went to Allstate's home office, and I lasted maybe a summer. And I was like, wow. I think it was an internship even, and I'm like, this isn't me, right? I want to go back to the medium-sized business where you're doing everything every day. Then I went to the minors. I got an MBA while I was playing in the minors just because I knew I wasn't good enough, but I wanted to try one last time. I made sure I kept my
Mhm.
education. Then an MBA professor said, "You're very good at this stuff. You should do a PhD." I said, "Okay, what's that?" Then I did a PhD. Naturally, you get pigeonholed in an academic job. Took an
Mhm.
academic job, moved to Western because it was a hockey school, and I wanted to raise a family and start that. So we moved closer to family, and all of a sudden I'm in Western teaching, and I'm like, ooh, this isn't the same as being on the ice and getting after it. So what am I really good at?
Mhm.
What am I uniquely qualified to do? What have I learned from other people? from those mentors growing up. And then I consulted with a ton of small businesses while I was doing my MBA and PhD. And I just said, uniquely me is going back to, doing this. I've got the education, I've got the training, the background and I've got the mentors to, and I've done enough reps watching them. Like when I left that Thunder Bay, he had opened a golf course. He was doing a winery in Chile. And I'm like, holy cow,
Mhm.
this is the most amazing thing
Wow.
ever. So I was like, okay, I'm going to do that. And
Hmm.
so how does that fit West Michigan then? And so then it
Hmm.
got to how do we actually do this in West Michigan? So what's the unique and best model that we can provide our community? And so that's what we
Yeah.
built. Yeah.
Yeah. No, fantastic. So there are a lot of people listening to this podcast who really have no idea how any of this works when it comes
Hmm.
to private equity or even, you hear all these every company ends in capital. Like, what is going on? Where's all
Hmm.
this? What's going on here? Pull back the curtain, and where's this money coming from? And there's got to be something devious about it. Like, what's happening here in this world? Can you kind of pull back the curtain, and how does
Yeah.
it work? Can you just like
Yeah.
assume you're talking to someone who has no idea, just stepped off the planet, they have no idea about any of this? Where does the money come from? What's in it for you? Like, what's your role? And what's the end game? Like, what are you trying to do?
Yeah. So that's a very deep philosophical question too. But capital, my partner wants to say capital of our name, but you know, um, and you talk about private equity, right? Well, every business in the world needs ownership, right? That's how
Hmm.
capitalism works. Every business has to create value for customers. Those businesses create tremendous value for the community by creating value for customers, right? That's the heart of capitalism, right? You guys create value for owners by advising them through their succession to retirement, right? That's the value you're providing to owners. So every business in the world creates value for somebody or it wouldn't be around. It solves a problem for some customer, and that customer is willing to pay for it. Okay. And then all those businesses have ownership, and that's what motivates the system, right? That's why those owners are doing it, um, and because they get rewarded for their efforts, and they contribute to society by getting rewarded for those efforts. So where does capital come in? Well, as businesses grow and grow and grow, right, they become worth something to people, right? That owners created a very good value to society, and they grow. Some of them become public, right? That's their exit. The owner exits by making that company public. He's like, I need to retire. I'm going to take this company public. Those are the super successful ones, or the ones that grow super large, successful, depending on your terms and how you define that. And there's a whole bunch of businesses that are super small, and if they don't provide enough value well enough, they go out of business, right? If you're
Hmm.
not providing
Right.
value to society, you
Yeah.
go out of business. That's the other end of
Hmm.
this. And it's constant. You have to constantly update and provide more value and refresh your business and stay with the times and continue to serve your customers. You have to innovate. You have to change over time. All like a business has to be built and the culture has to be built to do that. Um, you think of a typewriter business; those aren't around anymore unless they converted to computers, and then whatever AI is
Hmm.
going to take us in the next 10 years. So all of those businesses need ownership, but when someone wants to exit, what happens? Right? Well, this is where capital is needed. So in that, private equity is one model, venture capital is one model, family offices are one model. All of these people have worked hard to gather capital to invest in businesses, right? To give people ownership in businesses. So at a simple level, we've taken capital from mission-aligned investors, we call them. So we say everybody that is concerned about West Michigan, wants to think long-term, or somehow affiliated with Western Michigan University. Those people are
Hmm.
super concerned about, hey, I don't want all these middle market businesses owned by people in New York and Chicago. They have different
Hmm.
motivations than what a local owner does, right? The second that business is, in our view, is sold to somebody in a private equity firm in New York, Chicago, they're no longer using your local business advisors. So they're not going to use Tamaris. They're going to use somebody else. They're
Right.
no longer using the local lawyers. They're no longer using the local real estate agents. They're no longer have their
Hmm.
head employees locally in most cases, and go down a list of things that are no longer local. The sports team that needs a sponsorship can no longer go to that organization in most cases, right?
Hmm.
They're just like, nope, we're not interested.
Right.
The capital and that businesses contribute to society, and a customer pays them for that, right? That money then gets extracted to New York and goes to New York. So it's left the community,
Hmm.
right?
Hmm.
So you think of a company, a lot of these economic development corporations say, we need employees, they can't leave the community. And we're like, well, The ownership can't leave the community. That's almost as important. The capital that's generated from that business now leaves our community. So we've got investors that are really concerned about keeping the ownership, the contribution that that company creates for society locally, right? Keep
Hmm.
it,
Yeah.
and then you've got a different perspective totally on how you operate that, right? Our CEOs that and our capital sees those employees out in the grocery stores. They sees those employees. They see the service providers locally, right? We're not using
Hmm.
you anymore. Okay, well, that's a thing. Why aren't you using us? You have to kind of face the music. So it's a little more cared stewardship of those companies with a little more focus on local. So we have created two funds that will invest behind inspiring entrepreneurs, and those funds have pooled capital. A bunch of people that have invested and believe in what we're doing.
Hmm.
They invest with
Hmm.
us. We then take their money and we buy companies with that money from owners, and we put in a new CEO. So that owner, we give that owner money, he retires, that becomes, he puts that in some other investment vehicle that's not as risky as owning a
Hmm.
business and something that he puts it in the stock market, he puts it in a retirement fund, whatever the term is, puts it with a wealth advisor. That wealth advisor invests for him in less risky assets. He no longer has to show up every single day and run his business or
Hmm.
stay awake at night. We are now owners of that business. He can retire and go do something else, or she,
Now,
whoever
do
owns that
these
business.
funds, it's fascinating. This whole thing is fascinating to me anyway, and I'm sure to a lot of our listeners. Um, are these funds evergreen or is there some end game with the fund?
Yeah, our fund is evergreens. That means
Yeah.
as we generate profits from our companies, right? We will share them with the employees, we will share them with that new
Mhm.
owner, and we will share them back to our investors, right? We are not a nonprofit. Our investors expect a
Mhm.
return. And that return is a thing. That means if we're getting return, that means our companies are creating value in West Michigan and creating value in society. If they're not generating a return, then they're not creating a value, right?
Mhm.
That's the secret of capitalism, right? In order for a company to generate return, it has to generate extreme value for a customer. And if
Mhm.
we're not generating a profit, that means we're not generating value for our customers. So we're doing something wrong. That's our signal. And as we generate value for customers and we generate profit, that means our investors get paid back and they say, great, when we get money back, do it again, right? We want
Yes.
you to be able to
Right.
keep buying companies and keep developing the future leaders of West Michigan. So all of our CEOs are
Mhm.
now expected to be leaders in West Michigan. You own a company, you have a
Mhm.
responsibility to be a leader in West Michigan, whether and you do that however you want, whether that's through, taking a leadership role in religion, or it's through, aspiring young owners, or whatever that next generation, the Future Leaders of America program, the Boy Scouts, the girl, whatever that is, you need to be a leader in
Mhm.
West Michigan, and you ever now have
Love
a
that.
responsibility to West Michigan as we invest in you.
Yeah.
So the CEOs are here. They're involved in all the local things. I do it through coaching kids hockey, right? I'm a leader in West Michigan. I'm going to coach kids hockey. That's the best way I can figure to give back with my time. Um,
Mhm.
and so, yeah. And so they say, keep doing it. As we get profits back, do it again, right? And it should be an evergreen,
Mhm.
eventually a flywheel that keeps going. We are a long way from that today, right? We've got, 8 to 10 years before we hit that cycle.
Mhm.
But
The model that you have put together is very interesting, very unique. Can you kind of walk us through the residency and how
yeah,
I think the phrase seeker, I've heard that like this is very interesting to me and how that whole thing works.
yeah. So, what is our promise to the West Michigan community? What is our promise to business owners? What is our promise to our investors, right? It is we will find very talented individuals, right, that want to be CEOs, that have an entrepreneurial bent, and we will make them the CEOs of West Michigan companies and leaders in West Michigan. Okay, so what do you have to do first? We have to find great talent. We have to find
Mhm.
great people that want to be CEOs. And it's not like I get to be a CEO. It's like you are taking the responsibility of being a CEO. You are now responsible for every employee. You are now responsible for that company. You are now responsible for your customers. You are now answering to everybody, right? Um, do you want that leadership role in West Michigan through us and for that company? Okay, if you're a yes, plus you need business acumen, you need all of these things that we can train and do. So we have to, 3/4 of our time is finding highly talented people, right? And we put them through a training program, an 8-week training program of this is how you buy a company, this is all the things you work for, and this is how our model works. And once they're through that 8-week program, they can apply to be in our residency program, meaning we will invest in them for 2 years to find build a relationship with an owner, and be that succession solution for an owner. You have 2 years to do that. If you can't do it in 2 years, maybe this isn't for you, right? So a little time pressure there on that. And then that person comes in, once they find that ultimate best succession solution for them, meaning the company that's best for them to buy. We call it context fit. You found the fit where you're going to be the leader of that company until you retire, right?
Mhm.
They buy that company. We help them buy that company. They become CEO of that company, right? And they run that company until they retire.
It's fascinating.
Yeah.
And I I'm just blown away when I think about this whole model.
Mhm.
It's so beautiful. But
Well,
one thing that's really
it's beautiful. It's
interesting.
got a lot of challenges. It's not
Well, I'm
easy.
sure, but no, I mean it just makes sense. It makes sense. It's interesting though, at the forefront, someone who is at the beginning of this process, this talent person, um, they're not matched up with a company. They're not jumping into this to buy a certain company they've identified. That's coming later in the
Mhm.
process, right?
Yeah. Well,
Yeah.
so there's people approach us in a number of different ways,
Oh,
Phil.
okay.
It comes to some say, "Hey, I want to buy this company." I said, "Do you have any idea how to do that?" And so we have a training program that's for them 4.5 weeks, and usually by the end of that, they're like, "Oh, maybe I don't want to buy this thing."
Got
Right?
it.
Maybe there's other
Okay.
options out there, and
Okay.
maybe it's
Yeah.
like, "Yep, I'm going to go through it." And so we've had
Hmm.
14 people that have gone through our program that we have not invested in. I think it's 14 or
Hmm.
12 to 14 that have gone out and bought their own companies, right? And that's good too. Um, and then we've had the ones we've invested behind, but they come to us and they say, "No, I like your model. I want to be an owner operator of a company. Help me do this." And then we spend 8 weeks in a really deep dive one-on-one coaching program. It's not a class, not a program. It's one-on-one coaching for 8 weeks where we get very personal on what do you want to do? What are your goals? Okay. What company are you a best match for? We spend 2 to 3 weeks there. What type of company? What are the characteristics? Are you an engineer with an MBA that loves manufacturing? Are you an HR person that loves HR and talent? Are like, what are you? Okay, let's make sure that you can add the most value to the company you buy, right? And there's a good, we call it context fit. And then so we help them discover that, and then we help them search for that. And then if we agree that it's a good fit for West Michigan and they're a good fit for our model, we will support them for 2 years of doing that. So we'll go find something that matches that we call it a thesis or that category.
Right. Okay. Then these companies that have been acquired, and you've
Mhm.
placed your talent in there, and you have the CEO running the company. Is there some attempt to coordinate activity between all these different companies, do back end accounting, or support them in some way? Or are they running completely independent of each other?
So it's a good question. We do not inject ourselves into the company. I'm not the company operator. I'm the CEO. That's what that person is doing. That person is the owner operator. Any value that that company's creating for society should be able to be paid for on their P&L.
Hmm.
Right? Now,
Yes.
do we do things like bring our CEOs together at once and help them talk through challenges with
Hmm.
each other? Yes. Do
Sure.
we
Of course.
help? Do we help them with if they have a question on back end accounting? We have a great talented staff here. We help them.
Mhm.
If they have a marketing question, we have someone that's a marketing in our team they can ask questions for. But we do not, we call it shared services across the companies. We
Mhm.
don't do that. No, you are an
Okay.
independent company. You need to do what's best for your company and not what's best for the portfolio. You are the owner of that company. You do what's best for your company. If you think you need it, you should be able to pay for it on
Mhm.
your P&L, not on our expense, right? Um,
Mhm.
so we are a very market-driven kind of organization. The market's telling you what your company needs. You need to make those calls, and if it's worth
Mhm.
it, you should be able to pay for it.
Yeah, again, unique because a lot of the industries I've been working in, there's just a roll up strategy, and everyone's, the shared services are pervasive, right? I mean, that's the whole game is,
Yeah.
strip out costs, and but as you said in the beginning, where's all the money going? It's going
Right.
to New York or Chicago, right?
Yeah, and the shared services model, right?
Hmm.
That person that we've invested behind to be a leader in West Michigan, they got to run a company, right? And so if we
Hmm.
start providing all these shared services and the services aren't good, whose fault is that,
Right.
right?
Yeah,
Uh,
they're no longer in charge.
and
Right.
if I think a company needs the services, how can I make that call from, you know, an hour drive away if we have a company in Grand Rapids. I don't know what that
Hmm.
company needs. Like that would be
Hmm.
not very humble of me. It might need something. You see a lot of playbooks and things and all these
Hmm.
myths in the private equity world, right? We are big in empowerment and accountability, right? And
Hmm.
responsibility.
Yeah.
Your company, you're the CEO now. If you think you need something, it should be able to be paid
Hmm.
for. You need to make an investment, you make that investment. You make that
Hmm.
call, not us.
Yeah.
So
Do you have an active resident, and what's an ideal company that you're looking for to
yeah.
acquire?
So back to context fit. Ideal company,
Hmm.
if it's under if your company, so let's talk to business owner. If your company is doing under $1 million roughly in earnings, you don't need an investment group. There's no need for that, right? There's an SBA loan. You can help someone take that over. You don't want someone from the outside necessarily. Like that's just not doesn't make sense. Where the sticky spot for owners, or at least we've found, is you get to 2, 3, $4 million in earnings, five, six, somewhere in that range. You are now in a range of okay, this thing is I've created a ton of value for society, and this thing is actually worth a lot of money. And
Hmm.
you take a $4 million earnings company, that company's 20, 25, $30 million of like who can help them exit? A succession solution needs someone to help them give them $30 million
Hmm.
for that company, which isn't sitting everywhere, and
Hmm.
provide a new leader. So our ideal company is kind of in that range. We were a succession solution for that group of people who, for that person to retire, a lot of capital is needed and an owner to take over or
Hmm.
a CEO to take over. And so then we back up and say, who do we have? An ideal person? Well, there's from all the research, there's no ideal leader or business owner. You know, I keep telling everybody I'm going to write a book of all the business owners I've met. Because you've met one business owner, you've met one business owner. They're very different depending
Hmm.
on what
Right.
industry they're in, what company, the business owner running the manufacturer versus the service industry versus a tire shop versus the greenhouse. Those are very different individuals.
Hmm.
So I mean, there's a few things. You got to be hardworking. You got to have a certain mindset. But other than that, right, there's not a lot of things that defines it. So we take that person and say, what's the ideal company for this person to own and operate?
Mm.
Let's go find that. Um, and so our competition, as we're looking for industries, you think of the ESOPs that are out there. That's a lot of our owners that we're
Hmm.
talking to are thinking that pathway to keep ownership local and with the employees, or
Hmm.
family offices tend to be one. And then, private equity is obviously a competitor, but usually if someone's considering that, they're not a fit for us, right? They're already
Hmm.
gone down that path.
We were talking before I hit the record button about family businesses that
Mhm.
maybe the founder or the current leader of the organization is thinking about the next generation, and trying to use someone like my firm, engage us to help bring up the next gen so they can take over the business, and whether they need a partner, a capital partner or not. But we had a conversation about just how to think about that play, about you have two or three kids and they all have different skill sets and things, but is that really the best way to approach this versus saying, maybe there's a better leader out there? What are your thoughts about that?
Yeah. So if I was to give advice to business owners, there's multiple spots where this can come from, right? Your advisors, your financial wealth managers, so you have this company, it's the legacy. The legacy is the wealth that it's built, right? In general, the name, the brand, and the wealth that's built. Uh, and the analogy I use that I've heard from someone, right? When a public company hires a new CEO, they hire search firms, they scan every potential candidate on earth, they get 1,000 applicants, they narrow that 1,000 to 500, they narrow that 500 to the best of the best, and they're selecting from the world population the best CEO for that company to take over, right? It could be someone internal, it could be someone
Mhm.
external, whatever that is, and they go
Mhm.
through that hard process and they hire who they believe is the best person. If you're a family business, you get to choose one of two or three, depending on how many kids you have, right? Your pool is down to three. So is
So
that the
true.
best? Is that the best option? It could be, but your pool is very, very narrow. So then you got to go. Then you got to go. Does someone have the skills to take this over? Well, your family's aligned with your brand. They're aligned with your legacy, so you get that
Mhm.
benefit from it. So there's a trade-off there. Um,
Yeah.
I would, our the I think it was Tom Deans that said it. Someone said, you should sell it to your kids, right? Get a valuation done every year and say, kids, do you want this? Here's what you have to buy it
Hmm.
for, right?
Hmm.
It's like, well, that's not fair. Well, it is fair, right? Because don't forget, that owner could be hurting their kids. Their kids may want to go do something
Hmm.
else. It may not be their
Sure.
passion, but they're pulling them into the
Right.
business. So there's that too.
Hmm.
Like, don't make them responsible for your legacy and your business. That's not your child's destiny in life, or that may not be where they
Hmm.
flourish. So you don't want to put that pressure on them either. So, but if it's there, make them buy it, right? Because you want to make sure that that wealth is preserved in your family, not necessarily the
Hmm.
business, right? The wealth. So that's the first way you should be thinking. And then after you've done that, and if you can figure out a way to do that with your kids, right? But handing it to them, they're not going to value it the way if they got to pay. If you have a $20 million business and you hand it to them, maybe you should think about selling them for $20 million. Make them get the debt, make
Hmm.
them feel that burden, make them feel that entrepreneurial spirit, and they're going to value that business way more when they're 40, 50, like they've actually accomplished something, right? Versus being
Hmm.
handed something. So there's different reads there. We actually have a lot of family businesses where the kids have contacted us. And they say, hey,
Hmm.
and I had one last week that my dad's 71. He's built this business. He deserves to retire somewhere and he deserves to get the wealth that he's put into this. I would like to buy him out. He wants me to buy him out, but we've agreed that there's a price. I said, I can work with that, right?
Hmm.
Um, but I should retain all ownership. Yeah, sure. If it's $20 million, put $20 million on the table and you get to retain all ownership, right? That's what this
Hmm.
takes, right? Do it like it should be done and keep everybody open and honest. That would be my best case for family members. Get a valuation. Here's what it's going to take. If you want full ownership, here's the money that's required. Where is it coming from? That's the next question. And
Yeah.
dad and the owner, the mom or dad that owns the business can finance it for them.
Hmm.
But that means you're carrying a seller note, right?
Sure.
But make it a note, make a debt that they owe you that obligation. They can pay you off over 20
Mhm.
years or 10 years, whatever you or 5 years, whatever you do. But make them earn it, make them value it. That would be my suggestion.
Yeah. No, thank you for that. As you were talking, I was thinking there was a client I met with last week out in the Denver area, and we worked with them for several years. Mom and dad before the business was sold to their two sons, and it was a clean deal, all cash, 100%, no seller financing, nothing left over, and it's really a great situation. The two boys are flourishing, thriving. They own the business. Mom and dad are not encumbered. They're not looking over their shoulder. It's a great situation. So no, I love that perspective, and thank you for that. Um,
Yeah,
is
release,
there
release,
anything?
release, release Junior to let them flourish, right?
Right.
Let them,
Yeah.
they now
Or
have
not,
full
or
ownership.
not. Let's see
Yeah,
what they
or
can do
not.
with it.
Yeah,
Right.
right. Flourish or not. And if they fail, you've still preserved the family wealth and they can create their own wealth on their own. And that's the biggest, then they've contributed and they feel great about that in the long run. So yeah, it's a little bit controversial, but I think it's the right path still.
Yeah. No, it's great. Is there anything we didn't talk about that you were hoping to get into here? Because I want to kind of, if not, I want to kind of move toward wrapping up.
No, I think if anybody that's listening to this knows anybody that has, an entrepreneurial spirit, we're always looking for highly talented individuals in West
Hmm.
Michigan. We need a lot more. An entrepreneurial
Yeah.
spirit that's capable of running a business, mention Sleeping Giant Capital to them. That's all I'd say. We lead with very talented individuals. If you know anybody like that is thinking about as any entrepreneurial spirit in them, but they just don't know how to get there,
Hmm.
we can show them the path, whether they come to us or not. I think
Hmm.
for our community, we want to provide a number of succession solutions that are of great quality to the
Hmm.
business owners in our communities that have spent generations employing people, giving back to our community. Like, let's provide more succession solutions to them so they can judge and get the best one that fits them. So the more people we can
Hmm.
train, the more succession solutions are out in West Michigan for them.
Good. Good. Great takeaway. Good actionable item. Well, I want to wrap up where we started by talking about hockey. You mentioned coaching hockey. What age? What level?
Yeah, I coach. My son is first year Pee Wee now. I started
Nice.
I started coaching when he was. I didn't coach his first 2 years, and I was complaining, right? And my wife's really good. Stop complaining. You got two options: stop complaining and do nothing, or go out and help. And then and that's your fault. You're accountable. right? You talk about accountability, go have some accountability. So,
Hmm.
um,
Hmm.
yeah, so I went out and started coaching, and I took 20 years away from the game to build my resume, build businesses, get experience. I didn't even watch a hockey game for almost 15 years. Didn't even think about it when I was in Texas, after stepped away from the game. I got back, and I just love it. I love giving back to the kids.
Hmm.
I love helping them grow as individuals, as people within the game. Sports can do a lot um, for helping just people develop. It did a lot for me. The game did a
Hmm.
tremendous amount for me. It gave me my university education. It helped me move to the United States, which I loved. So it's my way to give back. And it's
Yeah.
just I'm Pee-wee right now. I'll move up next year until they ask me to step away.
Awesome.
They can ask me to step away any way I want, and I'll step away. But I think it's an easy way for
Nice.
me to give back. Yeah.
All right. I love that. All right.
Mhm.
Well, do you ever get a chance to get out and suit up and get on the ice yourself, or are those days over?
Yeah, good question. I get asked all the time. I have not suited up in a game since my last playoff game. I've never played a men's league game. I've never played a beer
Mm.
league game.
Hmm.
My
Yeah.
passion went to my family and my business
Sure.
and helping
Yeah.
individuals.
Yeah. Right. I love
Uh,
that.
I did sign up through the Fox organization for a Hockey Fights Cancer game, where we
Hmm.
play the U16 team. I think it's a bad idea for me. I don't have any equipment. I don't have any gear. I still don't know how I'm going to do that. But all the coaches throughout Fox play against the U16
Hmm.
team for a fundraiser, and
Hmm.
everybody knows someone that's been impacted by cancer, so I can help our
Sure.
organization that I volunteered to help.
Hmm.
Good thing there's enough coaches where I don't think I even have to go play. I can just sit on the bench, which will be helpful.
There you go. All right. Derrick, thank you so much. This has been great. I really appreciate it. And yeah, the big takeaway for me is let's go find some talent and hold on to them.
Yeah,
Yeah.
let's that talent is the tamarisk tree for West Michigan, right? They're the
Hmm.
person that's going to take
Yeah.
over for the next 20 years and keep the legacies here. And in 20 years, when they're ready to retire, we can do it again, right? Put a new
Hmm.
person there and find a new leader.
Yeah.
So that's how you got to think about it. That talent is that tree. Let's keep finding those trees and planting them in
Hmm.
ownership and leadership roles of the companies in West
Hmm.
Michigan, so they can be leaders across West Michigan also. So,
I'm all in.
all right. All
All
right, Phil.
right.
Hey,
Take
thanks a
care,
lot. Thanks for
Derrick.
having me. I
You
appreciate
bet.
you. It was great
Have
having
a
the
wonderful
conversation.
weekend. Take care. Yep. Bye now.